Matic is Polygon's token. Why is everyone talking about this project? What are the fundamental factors that have caused its recent hike? What solution does Polygon provide in regards to Ethereum? We'll tell you all about it in this video. Polygon is a layer 2 solution. In other words, it is a solution that works on top of an existing protocol to improve its scalability and therefore be able to carry out more transactions on the blockchain. In short, they improve the performance of a blockchain without the need to alter the original chain while also enabling cheaper transactions. Polygon uses a version of the Plasma framework which is based on proof-of-stake checkpoints and runs through the Ethereum chain. This technology is what enables Polygon's sidechains to process thousands of transactions per second. Additionally, the key to understanding the success of Polygon is the ease of developing decentralized applications on the blockchain. Now that we know why Polygon was created, let's carry out a technical analysis around Matic's token. And be sure to stay until the end to find out what fundamental factors have impacted its price. In Matic's weekly time frame, we can see how since December 2021, the moment in which it reached its all-time high, it has experienced a pretty significant fall. And if we take a look, between roughly January 24th and April 11th, once the $1.3 zone was lost, the price fell until reaching the important support zone between $1 and $1.1. Once the zone was lost, the price fell abruptly until reaching the zone of lows at $0.32. As we can see, 8 weekly consecutive candlesticks have formed, which is equivalent to an 89% drop since its all-time high. Despite this, it isn't the most abrupt drop seen in the market. Additionally, the all-time high was reached at a later stage than other cryptocurrencies such as Bitcoin, which reached its peak in November. The week starting May 9th, the $1.1 zone was lost, after which the price went on to test an important support zone between $0.61 and $0.72. But following this large spike, bulls or buyers attempted to absorb the fall and the price continued to head towards the support zone, resulting in the following candlestick closing above that support. Between May 23rd and 29th, we can see how a bearish weekly candlestick started to form, closing below that important support zone, reaching the $0.6 zone. From then on, we can see a significant liquidity gap zone between $0.42 and $0.61, which represents the weekly candlestick between April 26th and May 2nd, 2021. May and June's weekly candlesticks have been filling up the entire zone, which is what we call a price construction. The week starting June 13th, the price headed towards the next support between $0.25 and $0.31, although it doesn't touch it entirely. We can see how it created a large spike in that zone and managed to close right on the $0.38 support. The week starting June 20th, a bullish engulfing candlestick with volume input formed, which headed towards the resistance at $0.63. And something to note is that if we take a look, the RSI sat in a pretty relevant weekly oversold zone, which is the first time in Matic's history that this has ever occurred. If we display the moving averages, we can see how the week starting May 9th, the 20-period moving average crossed that of 50 on the downside. Now, the 20-period moving average is heading towards the downside, which is why it will most likely end up crossing the 100-period moving average. So we'll have to pay close attention to this crossover. And now let's move on to the daily time frame, where we can see with more clarity the structure which broke the support on the downside. This structure took place between May 12th and June 11th, when a type of descending triangle formed a bearish continuation pattern. In fact, the price, as we can see, continued until the next support zone in the short term, and this fall was accompanied by significant volume input. On the 18th, it lost the support zone at $0.38 and tested the support at $0.31. And something worth highlighting is that between May 12th and June 18th, an important divergence formed in the RSI as well as the oscillator's compound. From this moment on, an explosive recovery movement was carried out, which led the price to the resistance zone at $0.63. This movement wasn't only caused by technical forecasts, but by fundamental factors, which we'll be covering later on in the video. In this chart, we can see that the recovery totaled to 97% in just 6 days and led the price to a resistance zone. The candlestick on June 23rd stands out due to its significant volume. As we can see, the price is creating a bearish trend line in a minor trend. On June 24th, 25th and 26th, we can see the price touched the resistance that converged with the downtrend and created a reversal pattern with a doji candlestick, marking indecision and somehow created a type of evening star pattern. Later, we saw an attempt to continue towards the downside, where in the $0.63 zone, we saw a spike with a candlestick that managed to close below the opening of the candlestick on the 24th and continued with its bearish movement. With the averages, in fact, we can see that the price is using the 50-period moving average as a resistance and pivot zone. Now, the price seems to be moving towards the 20-period moving average and the $0.46 support zone. We'll have to wait and see whether it manages to maintain that zone or whether it reaches the $0.38 zone. If we see candlesticks closing below that zone and we see volume growth, it could even go on to test the support zone between $0.25 and $0.31. If, on the contrary, the price bounces back to the $0.46 zone and we see a pullback movement, it could head towards the trend line. Additionally, if we see candlesticks closing above the resistance at $0.62, we could see a consolidation movement above, heading towards the dollar zone where another major trend line has been forming since its all-time high. And now let's move on to analyze news stories that might have impacted the price of Matic. In a tweet published by Sentiment, Matic's large purchases can be seen, which have been carried out by whales over the last few weeks. Specifically, wallets with 10,000 to 10 million tokens have accumulated an additional 8.7% of Matic. Additionally, if we take a look at the Whale Stats cryptocurrency tracker, we can see that on June 22nd, one of those whales acquired 10 million Matic tokens valued at more than $4 million. This evidently could have impacted its price. But this is not all. As we always say, price movements tend to be a result of a variety of factors surrounding projects. Polygon has joined the fight against climate change as it announced the acquisition of carbon credits worth $400,000, credits that will prevent the emission of 104,000 tons of greenhouse gases. But good news around Polygon does not stop there. Coinbase has recently announced that cryptocurrencies can be traded on its exchange through the Polygon blockchain. At the moment, Ether, USDC, and Matic will be exchangeable through the Polygon blockchain, and more assets will be added over time. Now, let's stop and analyze something that's been mentioned in that Coinbase statement. It explains that the Ethereum network is very expensive and therefore leaves out millions of potential users. This, in some way, encourages other networks such as Polygon to compete with the still leading Ethereum. In addition, recently a report from the Bank of International Settlements talks about how Ethereum miners manipulate transactions to maximize their profits. It also points out that the change of proof of stake will not prevent this practice. By the way, if you'd like to learn more about this update, watch this video right here. As we can see, positive news surrounding Polygon and uncertainty regarding the future of Ethereum's chain is somehow working in favor of Polygon and therefore leading Matic's price to rise. Now, let's move on to the Onchain analysis. But first, let's take a look at the Fear and Greed Index, which sits at 13 points. And although it is still in a state of extreme fear, a few days ago it was at 7 points, which means that panic is dying down in the cryptocurrency market. And here we can see the supply distribution of Matic, where large Matic holders have started to accumulate more tokens. Wallets holding between 100,000 and 1 million tokens have begun accumulating on May 1st, while wallets holding 10,000 to 100,000 tokens and those holding 1 million to 10 million began accumulating on May 9th. And more importantly, pay close attention to large wallets, those with 1 million to 10 million tokens. As we can see, they haven't stopped accumulating Matic tokens at any time. However, despite large wallets accumulating Matic, there have been a few new holders, as we can see in this chart. The number of new addresses has been decreasing. In the dips of mid-May and June is where more addresses have been created. And now, if we turn to the balance of exchanges, we can see how a balance reduction trend has been maintained in exchanges since the beginning of May. This reveals that Matics are being withdrawn from exchanges and transferred to cold wallets, which could be a positive sign because it would mean that investors intend to hold their tokens. At the end of January, many Matics were deposited into exchanges after its all-time high, after which sales kicked off, followed by the fall mentioned earlier. On May 1st, when the fall took place, Matic tokens were withdrawn, which is a sign of an accumulation by whales mentioned. And when looking at exchange net position changes, which measures wallet entries and exits from exchanges, we can see that it is negative, which confirms that there are more withdrawals than deposits into exchanges. And in the total volume of outgoing transfers, we can see how there have been 2 large outflows in recent weeks, highlighting those on May 31st and June 23rd. In Matic's entry chart, we can see that only about 79 million were deposited in mid-June, and on June 14th, about 80 million. In short, the Matic token seems to continue to spark investor interest, especially among those with large wallets. This, added to Polygon's blockchain's impressive performance, makes this project a great solution for Ethereum, which continues to be the leader in the DeFi ecosystem, but raises some doubts about its future. What about you? Do you think Polygon will continue to be of use after Ethereum's 2.0 update? Leave your comments below.